Good afternoon, everyone. Hope energy levels are good after lunch. By way of introduction, my name's Nick. I'm a leader with Deloitte Consulting Strategy Group. My teams and I spend a lot of time with global banking institutions, regional banking institutions, neobanks, fintechs, and other FIs designing really compelling retail banking and small business banking propositions. And we also do a lot of work with end small business owners and founders, and in particular to understand kind of their needs and desires as it pertains to business banking products, services, and experiences, and wanted to kind of share a little bit of those insights today. It's kind of our fundamental belief that if you kind of look globally in most markets, small and micro businesses, and I'll be very specific around small and micro businesses, is technically kind of an underserved segment. Historically, banks, when they talk about small and medium enterprises or small and medium businesses, that's a pretty large segment. You've got businesses that do less than 100K in annual revenue, right through to businesses that may cap out at doing 20 million. The needs of those businesses are completely different in terms of the product usage, in terms of the types of experience, in terms of the engagement model. And we feel that it's the lower end of that segment which really suffers. And so we believe that small and micro businesses, there's a big opportunity globally to provide more compelling, more tailored value propositions, products, services, and kind of experiences. I'll elaborate kind of a little bit more on why. I think before I do that, it's pertinent to acknowledge that there are players which have recognized this segment or sub-segment is underserved and are really doing some innovative product design and experience design really tailored to this community. Right here in the UK, there's been a couple of neobanks who've really understood small and micro business owners or founders' needs, that it's beyond just a transactional banking relationship. Pardon me. They're looking for a broader set of products and services, and they're looking to consume products in different ways, whether that's consumption-based, bundling, or even subscription models. In Asia, we're seeing some of the, particularly in Singapore, the high street and kind of universal banks recognize that small businesses not only need kind of a transactional banking partner, they're looking for someone to actually help them manage and grow their business. And we're seeing some really interesting propositions which combine things like supply chain management or even kind of operational efficiency advice and digital transformation advice. But we still feel globally there's an unmet need. And maybe to highlight that, let's kind of double click into one region. Let's take the US as an example. I think on the whole, banking offerings and services are below expectations in the US, particularly in small business. When you look at just average statistics, small business owners, micro business owners and founders still face elongated lead time. We're talking weeks, not days or hours, to do basic things like establish a banking relationship, apply for credit, etc. We're still seeing practices where business owners are facing difficulty accessing credit, either based on sophistication or lack of sophistication in terms of the underwriting or the kind of the credit models. And it's leading a big question mark in that region around who can fill the void and really provide the kind of the right products and services to small and micro businesses. You look at in the panel earlier, the comment was made around small businesses being the backbone of the economy. That's true in the US. 99% of businesses are small or micro businesses, 5 million in revenue and below. And what we're seeing is, and again using the US example, a shift in demographics in terms of business owners. We're seeing more female-founded, owned and led businesses. We're seeing more minority-founded, owned and led businesses. But we're not seeing some of the propositions catch up in terms of not only offering the underlying products and services that a business needs to kind of operate and grow, but also recognizing the change in demographic of owners and tailoring the proposition, tailoring the marketing, tailoring the authentic messaging around selling to resonate with those audiences. In fact, when you look in the US and you kind of test sentiment, there's a growing belief that banks need to do more to elevate the underrepresented and the underbanked in retail and business banking. They need to do more in terms of contributing to society and the economy. There's still a prevalent belief that depending on certain individual characteristics, you could be discriminated when you're applying for kind of banking products or services, and that values and corporate values is starting to become an influencing factor where business owners and consumers choose to bank. So that's just one really good example of a market where there's a high target addressable market, but incumbent banking institutions are failing to meet the demand. So we fundamentally believe there's a market moment right now globally where banks, fintechs, neobanks, and other FIs need to rethink how to engage and rethink the needs around small and micro businesses and really understand kind of what they are. To reinforce that, I'll talk you through some of the insights we gained. This year we spent time with about 500 small business owners, range of industries, range of backgrounds in terms of owners and founders, and a range of kind of revenue size, with the highest being 5 million. We work with them to understand rationale for existing banking relationships, products and services that they consume, where there are unmet needs from kind of their existing banking relationship, switching propensity, and also expectations and desires around digital. So what do founders really want? I think one of the fundamental things that came across in the data and in the qualitative discussions were, time is money. Founders are really looking for their banking providers to help them save time, plan for the unexpected, tell them what they don't know. And actually expectations, because you're dealing with an individual or one decision maker, usually when it comes to small business banking, are pretty similar to retail banking. Their expectations around digital experience, product innovation are really fueled by some of the innovative experiences they're getting on the retail banking side or in adjacent industries such as e-commerce or social media. They're really looking for a relationship beyond just a transactional banking relationship. They're looking for a partner who can provide all the ancillary services to help them manage and grow their business and advise them at critical moments, whether that's during corporate inception, whether it's doing fundraising, etc. So when we dig into the data, a couple of kind of foundational insights. One was when choosing a business banking partner, founders and owners typically tended to default to where they do their consumer banking. Again, you're dealing with one decision maker, you've one customer. There's also a high correlation between age of business and length of banking relationship. And we can infer a couple of things from this. One, if you're a bank, look to get businesses early in their journey. You bank them when they're young, they'll stick, there's stickiness there and the data shows it. And then two, there's probably an interesting rethink around how you would engage and proposition small business owners. Could you start bundling propositions which met their personal banking needs as well as their business banking needs and price them at the relationship level to make it a very attractive incentive to come and bank with you? And the value goes both ways because they're getting preferential rates on both propositions, personal and business, and the bank is potentially acquiring two primary relationships. When we start to look at product usage and expectations, again, thinking about these are individuals, not corporations in terms of how they think and their expectations, and that translates to product usage. These small and micro businesses are not complex medium-sized enterprises. They don't need treasury management services. They don't need complex structured credit products. In fact, they need really good rates and transparency around business checking, business savings, and pretty simplistic credit products. They need the right features and functionality to quickly help them manage their business, payroll, remote deposit capture, and the right kind of payment services and rails. Double-clicking into lending, one of the interesting things which came up was a lot of businesses in their early years, their formative years, so you think foundation year, year one, year two, struggle or are not using credit products. And there's a number of reasons for this. One, based on length of business, a lot of these founders or owners are first-time founders or owners, lack of credit history, they're being denied for business lending products, or they don't want to carry that on their balance sheet. And so when you're seeing a correlation with and a statistic where business owners in formative business years are actually using personal credit as a source of funding. So again, presents a really interesting opportunity for rethinking propositions really tailored at businesses kind of in their outset. When we double click into Gen Z and millennial owners, what is abundantly clear is that they demand far more from their bank or their banking services provider. So table stakes is give me great rates, give me a great experience on traditional banking products, debit credit products, but we need the ancillary services bundled in to help us manage our business. Accounting, bill pay, payroll, invoicing. I think the stat here around tax services is interesting. Almost half of Gen Z millennial business owners we spoke to said that they would want their bank to provide tax advisory services or even tax filing services, business insurance, HR, workforce management, even legal services. And I think what we can denote from this is there's a demand and there's a real opportunity to rethink the proposition and how you deliver these. That could be through an affiliate model as a bank. It could be kind of the whole marketplace concept. You could structure these in a bundle, subscription-based, consumption-based. Regardless, the demand is there. And I think, again, if we look in the UK at some of the top leading business-focused neobanks, they've done this marketplace or this kind of ancillary service concept incredibly well. And they're seeing the right growth numbers in terms of the acquisition of primary banking relationships. So when we talk to business owners around incentives for switching, understandably and not shockingly, money talks. So over half said they would consider switching their primary banking relationship to a provider which offered them better reduced or discounted fees. But more interesting was the fast follower reason was really around advice. Business owners, again, the majority that we spoke to were first-time founders, and they were quite open with the fact that there's a lot we don't know about running and scaling a business. And so why can't my bank provide me with the right advisory services? And there's a misnomer that advisory services has to be, a relationship manager on the end of the phone. The reality is, for these kind of small businesses and the unit economics around them, that gearing model will never work. So there's a balance between ensuring that business owners have the right access to advisors at critical points where they may need them, financial planning, fundraising, etc. But also, how do banks and financial institutions build in the right contextual insights into their day-to-day servicing journeys? Some really good examples could be how is a bank or a financial institution looking at historical transaction data and providing contextual nudges around better spending habits, or looking at cash in, cash out in business accounts, looking at invoicing schedule and potentially flagging cash flow issues. These are the kind of insights, contextual insights that business owners are starting to expect from their bank and will quickly become kind of table stakes. Again, when we look at the Gen Z and millennial kind of demographics, advice becomes even more of a leading factor in terms of switching propensity. I think an interesting one here is around the bottom one, financial education. Again, this doesn't have to be cumbersome, really tailored kind of webinars, etc., around what's happening with interest rates or in the markets, etc. These can be real-time insights during day-to-day banking or kind of key journeys. My team and I are working with a bank in South Africa at the moment, and one of the things that we're helping them design for is how can you provide contextual financial education as part of onboarding. And so what we've done there is, if you're a small business owner and you're going through the digital onboarding application, you enter key information as part of that, legal entity type, size of business, whether that's revenue, employee size, industry, certain other data points. The way we've built the model, the way we built the machine learning and AI around it, immediately as you enter that, the bank can show you, okay, businesses like you, based on the data you've provided, typically use these kind of products, and here's why they use them. So it's a moment of financial education. It's a soft cross-sell, but it's kind of authentic. So there's ways that you can build in all of this kind of advice services into day-to-day kind of banking behavior. On the topic of digital banking, unsurprisingly, there's an appetite for it with small and micro business owners. And again, we believe this is really fueled by experience and innovation that they get on the retail banking side and in adjacent industries. And when pressed on, yes, we would consider a digital-only banking provider, but here's what we would want to see, there's a couple of really interesting insights. This is not an exhaustive list, but these are the ones I want to kind of draw attention to. I think the first one here, around 61% said that they would expect a digital-only banking provider to have efficient customer support channels. Again, the gearing has to be right here, but in moments that matter, take a fraud event. That can be make or break for a small business. Very public news here in the UK in the last couple of weeks. A neobank was called out for not having the right kind of access for business owners during these kind of fraud or risk events. And business owner was trying to get hold of a customer support agent to alert them on potential fraud. It took him far too long, and during that time he saw cash leave his account and potentially putting the future of his business at risk. Another really interesting one is around the need for kind of personalized dashboards. I think giving business owners the ability to customize what data they see, where they see it, and when they see it is pretty critical. Not all businesses are the same. And I think when you start to look at the intersection of a founder or owner or business decision maker who also has retail banking relationships with you, is there an opportunity to even aggregate some of that information, particularly for sole proprietors? I think that could be a really powerful way to engage and recognize kind of total relationship value. So drawing back, I think what we've learned from all of the kind of the work that we've done with small business owners this year and with banks, neobanks and FIs is a couple of things. I think one, coming back to my comment at the start, small and medium business as a banking segment is a very, very broad range of needs. And in fact, it's multiple subsegments in one, or think of it kind of as a continuum. And we feel there's a real market opportunity, to the left here, particularly in the micro and small space. This is where we feel that there's a lot of unmet needs in terms of the correct products, services, and kind of digital experiences. And there's a real opportunity for kind of winners to emerge who recognize and create propositions which are really anchored around a couple of things. One, really good and competitive banking products and services, the ability to combine adjacent products and services to help founders and owners manage their business, the correct insights and advice, both data-driven or relationship manager-driven. And then secondly, how do you get businesses early, in their early years, and that there will be stickiness and loyalty there if you provide the right advice to kind of help them grow. I think the second thing is around experience. I was working with a customer in the US earlier this year, a fairly large credit union, and they had invested a ton into their retail banking experience. You could do anything in the app. It had won awards. It was very, very innovative for the market, but they hadn't invested at all in the small business side. And so they had issues where 90% of their small business customers were actually retail banking customers. And you could literally go into their branch and they would have business owners queuing up to deposit checks or speak to an advisor on their app, just doing retail banking transactions or servicing. That's a really disconnected, kind of bifurcated experience and builds a lot of friction in for the customer. So how do you recognize that a lot of small and micro business owners are, individuals and have individual expectations, and use your kind of retail banking innovation as the benchmark for what you need to provide in small business banking? Give them the optionality to customize what they see, the data they see. Give them the optionality and advice around different kinds of products and when they may need or when they may not need them. And that is becoming table stakes. And I think the final point I want to make is, there is a lot of opportunity with this segment. And, this doesn't mean that small business owners are looking to incumbent or legacy bank brands to provide this kind of innovation. As we saw from that 80% statistic, there is a desire for digital-only providers, and qualitatively, when we spoke to owners or founders, they couldn't care less who provides the products or services. They just want to make sure it's tailored to their needs, it's comprehensive, and it's competitive. And I think this creates a really interesting market for fintechs. I would say as a good example, watch for some of the larger merchant services disruptors. Started out disrupting the merchant services value chain, are now quickly moving into business banking, and I think they'll take a lot of market share. So I think it's a really exciting moment if you are a small business owner, because I think fast forward 12, 18, 24 months, the market will look a lot different in terms of compelling and complete digital propositions and experiences which cover banking products and services and beyond. And I think ultimately the small business owner will win. So thank you for listening. Happy to take any questions.
Thank you, Nick. Any questions from the room? I know I have some of my own. We have an immediate one over the side there.
Hi, I'm Jane from IBM, Nick, and I thought that was an excellent presentation. Just interested, we started out by discussing it was from America. Mm-hmm. Does those metrics reflect similarly in the UK, or is it generally, it's a much larger market in America, so, how do you feel about how much of that is reflected in the UK?
I think it's all very relevant. I think I wanted to spotlight the US because I would assume the audience is somewhat familiar with the UK banking market and business banking market. But all of the themes and the data points we've tested, and they are somewhat representative in most kind of major banking markets. I think, again, I'll really hone in on the small and micro element. That subsegment is where I think there's a lot of work to do in terms of fully meeting the needs and demands of the business. I think I would say the UK in general is more advanced when it comes to, I think, digital banking and innovative digital propositions than the US and other kind of first world economies, and that's partly driven by regulation. It's partly driven by society's comfort with digital-only banking. And as a result, I think we see some of the neobanks, particularly some of the SMB-focused neobanks, as kind of in the UK as the leading drivers of what good looks like. In the US, I think we're going to see a big shift in the next 24 months.
Any further questions from one on the front again?
Hi, Sarah Turner here from Vemi Money. Just wanted to get your perspective on Monzo's moves into the small business market that they've kind of recently been making a big splash about.
Yeah. I remember seeing some of the statistics, but I think, their growth trajectory is pretty impressive on small business. And I think the timing is pretty interesting as well, just in terms of what it will do for their business model and their kind of balance sheet. I think it's a reflection of, I think, what I've been talking about. They recognize as well that there's an unmet need, and they have the brand equity, they have the digital infrastructure to really create propositions which you go to kind of meeting that unmet need from a product service perspective. I think what will be interesting for some of these neobanks and also incumbent banks is the point where they start to recognize a lot of their portfolio on the consumer side, a lot of the portfolio on the business banking side, there's a big overlap. And how do you actually recognize that overlap, reward it, or price to it? I think that's kind of the next frontier.
Okay, we'll have one final question from the side, and then we'll take our next networking break.
Really enjoyed the talk. On the kind of stickiness piece that you mentioned, mm-hmm. How do you see that playing out? Maybe obviously forward-looking, if the challengers or fintechs can kind of take that market share, then obviously the stats would remain. But how do you see that playing out with maybe younger existing businesses in a world where they're maybe with a community bank in the US whose small business proposition is not as good, mm-hmm. And kind of migrating away to those challengers or those fintechs? Like, how do you see that playing out when the kind of disparity in feature set experience is so wide?
Yeah, I think to the stats at the beginning around the correlation between age of business and length of banking relationship, when we kind of qualitatively pressed on that, a lot of business owners said, well, it's just convenient, right? You know, I will start my business banking relationship where my consumer banking relationship is. I read into that, it's also the inconvenience or laziness of switching. And so I think in the UK with open banking, that becomes actually fairly straightforward. It's not an issue. In the US, where there isn't open banking yet, that's a slow frontier to hop. And I really believe if you make it easy for customers to switch, the right proposition, which encompasses banking products, the adjacent services, the right digital experience, and the right advice, you know, educate as you go and help business owners save time, plan for the unexpected, grow their business, becomes really compelling. And then I also think the whole concept for younger business owners around brand authenticity. So will we maybe see value propositions which are not only tailored to the small and micro business, but even hyper-tailored to industry verticals? You know, we're starting to see kind of affinity propositions pop up in the consumer space. I think we'll see that quite quickly in the small business space as well. So it's one to watch out for, yeah.
Okay, thank you for all your questions. And Nick, Cowell from Deloitte, thank you for the presentation.
Thanks.
Really enjoyed your company. Thank you.
Enjoy.